All right. So, hey, Vishal, we were just chatting for a second. Thank you for coming on. Vishal has just been a good friend of mine. He's been someone that I look up to in the industry, and everyone else does as well. He's highly regarded in the industry, worked in the hedge fund space for some time, which I think is really interesting sector to be in, especially with the rise of the quants and people looking at things much more quantitatively to make investments. I see that kind of transitioning now into the private markets world as well, right? There's a lot of signals that you can use, a lot of sentiment analysis that you can use to evaluate great fund managers, great performance. So he's working at Next Legacy right now, backed by a lot of visionaries and luminaries in the industry, a lot of, I think, athletes as well that have kind of come in to look to allocate their capital. And then I think before that, he was at Plexo Capital, which is a really interesting fund doing, investing into emerging managers. They're also a venture fund themselves. Also studied chemical engineering. So he's a technical person, just like myself, and then studied at UC Berkeley. But that's kind of the very high level summary, Vishal, from just kind of getting to know you. And, I've heard your bio in the past, but, just really excited to have you come on and go a little deeper and, maybe just share, how you look at the lens of venture capital and private markets, looking back maybe 1 year and then probably thinking about 2025. But why don't we start by just, introducing yourself to the community and learning a little more about how you got into the space.
Thanks a lot, Joel. It's a pleasure to be here. And before I start talking about myself at all, I'd like to congratulate you for the great community you've been able to build with such a certain capital. Every time I interact with anyone who's been around you, they only have positive things to say. So it's really a pleasure speaking with you here.
Thank you so much.
On my bio, I think you did an amazing job. You actually covered all the small bases, but let me just bring you back even further. So I was born in India. To a family of civil and mechanical engineers. And that was my push to study chemical engineering in school. And that's when I realized I actually enjoy math a lot more, even in school. So I went to BITS Pilani. It's a college in Rajasthan. Even there, I was a part of the student-run startup accelerator there. I was a part of the entrepreneurship cell. So that's where I got into the venture world. But I also enjoyed math. So I ended up joining J.P. Morgan as a quant with the macro investable indices desk. So like commodities trading, things, systematic risk premium strategy. So that is what I was doing for a good 3 years. And that is what brought me to the hedge fund world and the quant world. Then I went to UC Berkeley to do my master's in financial engineering. And that's where I had the same epiphany you just mentioned, that the quant world, the data-driven investing world, when it comes to public markets, is very well advanced. But when it comes to private markets, it's not really there. I thought my skill set could be really helpful there, could be really useful there. So that's when I made the jump from moving to the from the public markets to the private markets. I joined Plexo Capital. Plexo Capital, in a sense, as you mentioned, we do both emerging managers, diverse emerging managers, small LP checks, but alongside that, we also do direct venture investments. So it's more of a barbell strategy where we invest in extremely early stage, like pre-seed, seed, and extremely late stage. I was a part of Plexo Capital for about 2.5, 3 years, where I was doing both LP investments in diverse managers and also direct investments. And then I joined Legacy Venture, which is now Next Legacy, which also you gave a very good intro. At Legacy Venture, we've been deploying capital in early stage ventures since '99. Next Legacy is a combination of two firms, Legacy Venture and Next Play Capital. Legacy Venture is a firm that bridges the gap between the philanthropic world and the venture capital world. We've been able to distribute about $2.6 billion to the various causes our investors support. And then there's Next Play Capital, which was started by Ryan Neese. That's where we have a lot of athletes and cultural luminaries, celebrities as our LPs. So we're bridging the gap between the professional athletes world and the venture capital world. So the two firms came together in 2023, like about slightly over a year ago. We are still doing the established managers. We are doing emerging managers. We're also writing we're also doing co-investments directly into the companies sourced from our managers. Those are the three broad strategies within the Next Legacy. I focus mostly on the fund of funds aspect, both established managers and emerging managers. And yeah, I've been doing this for 5 years, and it's a learning experience. It's amazing that you get to learn from experts like yourselves and the community around you, and that just brings a lot of happiness for me.
No, that's exciting. Can you still hear me okay?
Yeah, I can.
Okay, cool. Yeah, I just want to make sure. So, one thing that I think could be really interesting is understanding what, the celebrities, the cultural luminaries are looking for. And, one thing that I think is really interesting is, like, I don't know if you ever saw that show Ballers with The Rock. I thought that was a really interesting show because The Rock is there, and there was a bunch of documentaries in the past where like football players they lost all of their wealth in 5 years, and I think that's a really interesting niche for that character, because there's an educational gap with people that are going out. I mean, the show is called Ballers, right? Because these people, a lot of times when they got into that type of wealth, they didn't know what they didn't know what to do. So a lot of times, if you watch, I watched all I think all 3 seasons, and sometimes there's, depending on how these people grew up, there's cultural pressure from maybe their people that they grew up with in the past that they feel that maybe they need to give back to their community and support them. But it's crazy on the show because the way that they give back, they just buy these lavish dinners and lunches with lobsters, and they just take their family out to these fancy things. And then what happens is, they go out to the club, they're buying bottles and they're spending all this money extravagantly, and then there's nothing left in like 5 years. So his unique niche was like helping people think about wealth building, think about wealth creation, maybe how do you build businesses to create active income, and really kind of still have a second chapter in your career after your athlete career, which is very fortunate for them to come into, can dwindle away if not done correctly. So, kind of that was just interesting because there's education that comes along with that. There's community, there's mentorship, there's support, and then there's also actual services that you're providing where you're helping them build a financial plan, right? So, with that in mind, I feel like that really mimics reality. How do athletes and, maybe celebrities kind of think about that now and what's important to them? I'm sure a lot of the celebrities now have been educated with their communities, and a lot of them have support groups and companies like communities like Tiger 21, right, where they bring in people. But I guess where's the new gaps and kind of where's the new opportunities for those people coming into wealth and preserving that wealth and also protecting the wealth?
I think I should definitely borrow the Ballers. I haven't seen the show, but if that's what's about, I'm borrowing the name and using it for our products for sure.
I love that.
But you're absolutely right, right? I mean, being an athlete, you're into wealth very early, you're into money very early, and it's
Mm-hmm.
very important to build wealth in the long term. But even
Yeah.
keeping that aside, it's very important to have the next step in your career. Like as you mentioned, that what are you going to do next? So one of the things which we have done, we support a small team of ours. There's something called Next Play University, where a lot of these athletes think about their next play after their athletic career. We help them get into portfolio within our portfolio companies. They're great at certain jobs.
Mm-hmm.
And these athletes are by definition special because they've been in environments which really different. Like none of the other folks have been in those environments, those competitive environments where they have to
Yeah.
do something. And it turns out that it's not really a one-way street where you're trying to help the athletes figure out what they want to do next, but it's also their skill can be amazingly helpful in the company world, in the startup world, in the corporate world. We try to bridge that gap in as efficient way as possible. But as you mentioned correctly, that the goal is to help them build wealth in the long term. So
Mm-hmm.
for some of the athletes, we help them get into corporates and succeed. So that's one area where we try to help them. The other area, as I mentioned, from the fund itself, a lot of them so they're not professional investors, and that's the
Mm-hmm.
skill we bring. So we help
Yeah.
get that capital and deploy in spaces which are closer to them, right? You can put the money in public markets, but you don't really see the innovation. You don't really see what's growth that's happening there. Like a lot of these
Yeah.
athletes put all their effort into one specific sport or like stuff, and then they see it grow exponentially. I think that is
Yeah.
what really mimics for what we're gonna have in venture, where we use their capital, we deploy in emerging managers and established managers in startups, and that really grows. It has a power law distribution and it really grows, and there's a huge win. and that helps them bring like
Yeah.
manage their capital long term. So those are the two ways we're trying to help. But as you mentioned, like it's very important to have bridges between different worlds, right? We host a summit which we call the Bridge Summit, where we get a lot of these athletes, our community, and we get a lot of operators, and we try to bridge the world for them, for first of all, the athletes to know how venture capital is run, like what exactly do venture capitalists invest in, like what is the things they're looking at, but also we show that where their skill could be most useful or most helpful, where they can have the biggest impact.
Yeah, I just posted a link. I just was curious who the most successful, athlete investors are. So I definitely, the top of my list would be Shaquille and Michael Jordan. So Shaquille, I think, was early in Google. And then there's a bunch of other ones, like so Serena Williams has Serena Ventures. I think she hired a veteran in the space, and that person's running the investment strategy. So any other, people that come to mind in terms of athletes that have done really well? I know Shaquille owns like a bunch of like Wingstops, and like those are cash flowing machines, right? I mean, people always are buying wings, and then I know Michael Jordan has done really well. I mean, early in his career, he owned equity in Nike. I don't know if you saw the movie Air.
Yeah,
It was a story of like Air Jordan. That was an amazing movie with like
loved
Matt
it.
Damon. But it's a whole concept of like, when you play, especially for basketball players, right? Their careers are a little longer. So they make a lot of money just playing ball. But like at some point, how do you make the money work for you? And it only happens with equity, right?
Yeah, 100%.
So yeah. So what other are there any other kind of people that you kind of see in your communities or the Bridge conference, Bridge Summit that you have that you think would be good people to follow maybe as like athletes or entertainers that have done really well?
Yeah. I mean, there are a bunch. I mean, you can Google and you can see a bunch of folks. The Chainsmokers funds. There's Ashton Kutcher.
Yeah,
Like I would even say that. So Ryan, who's one of our GPs, our founding GPs, managing partners, he himself has won a Super Bowl. Like he himself has been an athlete for a long time. So we have a lot of these folks within our community itself.
sure.
I think it'll be unfair to name many names because again, I
Yeah.
can just keep going and it'll
Oh, sure.
I don't want to miss someone, so I'm not going to start naming
Yeah.
people. But again, it's a big community, and I think
Hmm.
it's important, and it's actually exciting to see these folks getting into venture. Like I have
Yeah.
not followed a lot of US sports growing up. I'm more from the Commonwealth space, so I've seen
Hmm.
tennis,
Yeah.
football, or soccer. Those are my sports. But like seeing here, coming and seeing a lot of these athletes and seeing their journeys and seeing how I could use my skill sets for them to be successful. That really gives me a lot of purpose.
Hmm. Yeah, I saw Magic Johnson speak a few years ago, and he had a unique niche where he opened up Starbucks in like inner city areas, and I thought that was just a
Yeah,
crazy play, and obviously the pricing might have been different in different regions and different areas. The menu probably is different too, but that's kind of a unique strategy to expand to, and it did really well. So a lot of these people, these athletes are just super competitive, right? So they're just kind of
exactly.
by nature, they want to win no matter what they do. And I think
100%.
that's kind of something that you just don't see in the typical person or the typical entrepreneur. They just have to win at all costs, and they always try to outperform. There's another book that I read. Oh, I forgot the name of it, but it talks about I'll have to post it later, but it talks about Kobe Bryant and how he's the cleaner. There's like different types of people that grow up in life and different types of top performers. And there's people that do the work and then people that stay extra to like clean up the work that they did. And they classified Kobe as someone that just kind of had I think it's called Relentless. I think that's the book. I'll have to pull it up and post it in this episode, but just that relentlessness for greatness. I think that's kind of a key attribute that I've seen in some of these top performers, these athletes. So
Yeah. You keep fighting. Winning is important. You're absolutely right. You hit the nail at the head.
yeah,
Like these are the people who are there to win, and that really differentiates them, and that really makes them successful.
yeah. And then it sounds like not even as part of the fund, because obviously there's a handful of people, a good amount of people that are LPs, but it sounds like some of the mission that you have is really to just bring that community together to create impact, to maybe give them a soft landing, whether it's to be an LP in your fund or just to kind of get a job at a large corporate, it sounds like that's a great, positive mission that you guys have as well. Is that part of a foundation, or is that
So
just part of the
that's a part of
community
the fund.
building?
So there's Next Play
Okay.
University, which I mentioned, where
Yeah.
folks really try to help them, and we try to support them.
Hmm.
We also do fellowships. So like every year, I think it's twice or once where we get these athletes
Hmm.
together. There's that all the people within our community that teach them what venture is. Even
Yeah.
I try to pitch in whenever I can. We have these tech tours where, like,
Hmm.
I'm in Palo Alto right now, and there's a lot of shops, both historic venture capital firms, but also amazing companies. So there's a tech tour where we take them around to all these amazing shops, amazing offices, and give them a first person view of what it's like in each of those environments. We just had this like a couple months ago where we took them to the Excel office, to the LinkedIn
That's
office,
amazing.
Skyday office. Yeah. So we take the whole group, like think
Yeah.
15, 20 people, and they go there, they meet these people, they ask the questions, and it's very hands-on. So we have the like
Yeah.
university, we have the fellowship. So it's education, it's exposure, and
Yeah.
that's what we try to give to these folks.
I feel like that's the best way. I mean, I'm not raising capital, right? I mean, I just kind of have the platform, but I've met so many amazing LPs just through having people share their wisdom and share education, and even building community, like even doing like a small dinner with like high quality people. I mean, that's kind of like the hack, I feel. And I mean, it sounds like that's, been working for so many huge franchises, but I think, if fund managers kind of thought that way too and kind of built educational services or products or even this field trip. I think Allocate did that. And I think that was a really brilliant idea. I think they did this kind of field trip thing where they would bring in like some key RIAs or key LPs to kind of like a Sequoia office and do kind of a little field trip. That's game changing because you get to kind of live and breathe how these legends are kind of going about their day, and you get to kind of see that firsthand. And that could be possibly an eye opener to have them think about that and say, hey, maybe I do want to get into venture, or maybe I want to get into private equity, or maybe I want to start something of my own, build like my own kind of business. I say, what's kind of the distribution? You don't have to give me exact percentages, but do you see a lot more people going out and being entrepreneurs, or do you see them, trying to get into venture or maybe start their own fund? I guess what's kind of the consensus that you normally see with these people coming out as their next play?
I think majority would be the ones who go into the corporate world and the startup world, like not really
Hmm.
doing like not really investing. That's where we can
Yeah.
help them, but they could use their skills. That I think my opinion is that they'll be amazing at tech sales.
Yeah.
They're gonna make a lot of money, and they are very relentless, and they know how to win customers.
Hmm.
And that's a space where I have seen a lot of them succeed really well. Be it like within tech sales or like anything which is like within their specific sector's focus. So
Hmm.
if they play ball, right, and they're trying to build something like a tonal, for example, that's a space where they can go help in the product side as well and help in the sales side as well. It's a very easy way to learn
Hmm.
the corporate world. So I would say the majority go into the corporate and the startup world,
Yeah.
and a few go into the venture world.
Sure. Didn't Tom Brady get a interesting role at like Delta? I
Yeah,
thought I yeah, that he read it, but I think it's more for like leadership, right? Because he's a leader. He's kind of coming up with the plays. He's rallying everybody together and getting them together to just kind of pull together as a team and build culture. So I feel like even leadership skills and kind of getting
100%.
people to listen to you and like be aligned with your mission. I feel like there's some, superpowers there that could translate to the lead, just the corporate leadership world. So I thought that was kind of an interesting next play that I saw with Tom Brady. So
Yeah.
yeah.
Yeah, 100. So I think the whole people don't really like people value hard skills a lot, but I think there's
Hmm.
a what makes you go from 90 to 100 is those soft
Yeah,
skills, those leaderships. It's when
sure.
very few people are there in the world who are able to do that
Hmm.
really, really well. And that's, as you said, that's a space where these athletes really succeed.
Yeah. So let's switch gears a little bit and talk a little more about, asset allocation. What should LPs, be thinking about as they're selecting managers? There's so many managers out there. There's so many demo days. There's so many LPGP conferences. And over time, they all look the same, right? I mean, there's so many AI focused funds. many, I've seen funds that are already in DPI, even from fund one. They just had some really amazing home runs. So you've got the quantitative, you got the qualitative. They're all good people, right? They're all great at, sourcing, picking, and winning. So how can allocators be a little more, laser focused in this landscape right now?
I think it's very important to say that there isn't a one size fits all policy here. I think that is what people take away from these podcasts, these conversations. I hear someone says one specific thing and they put all their eggs in one basket. I just want to
Sure.
preface anything I say by saying that it may work for you, it may not work for you. It's a different ball for everyone else. As you mentioned, like the base of being a good venture capital firm is to be good at sourcing, picking, winning, and value add. Like those are the four pillars which are very important, and you have to succeed in either one or more than a one. I think there are two things that make a venture capitalist, at least from an institutional investing standpoint, stand out. Is either you do your research, who your LP is, what sort of exposure they already have, and what sort of additional exposure you're bringing. So if you're going to an LP who's a generalist investor, right, and they have a lot of enterprise exposure and they're looking for something in deep tech, that's where if your fund goes in says that, oh, I'm compared to my peers in deep tech, I'm one of the better ones. See, I have DPI, I have numbers, and I stand out. And I stand out in one of like these four sectors. I stand out very well in one, two, three, or all of them. That really helps them stand up. What works for me specifically is that if they're also differentiated, like if they have a differentiated strategy when it comes to each of those sectors, verticals, or like completely different ball game, that really excites me.
Yeah.
We are LPs in YC, right? I mean, that's a when we started investing in YC, like it was a completely different strategy. There's another one which we have invested right now, South Park Commons, which is again very similar -1 to 0 journey, which where they're trying to differentiate themselves by their model. But we also back managers who got a different strategy when it comes to how their venture firm works, or a different strategy in how many companies they're backing, how they're picking the winners, which sectors they're going for. As you mentioned, there's a lot of AI focused funds, right? But if I look into our portfolio, I'm seeing folks who've been deploying in AI since well before 2020 in the infra space, before AI was the term AI is right now,
Yeah.
right? That helps you
Sure.
bring the differentiate, like define yourself how you've been doing it for a long time and how you can win. I mean, just to borrow from our previous conversation, it's all about winning.
Yeah.
You have to win in a very programmatically, in a very structured way. And I think building your differentiation makes it very easy. So as I said, like do your research before talking to an LP, figure out what they want, and change your pitch accordingly. Um,
Yeah.
it is also important to start building relationships early. Like if you have a $5-10 million fund right now, it's difficult to get institutional LPs in. But if you see yourself building a fund which is like, let's say, $100 million fund in the long run, right? And when you're crossing that 75, $100 million, you need institutional backers, because your first fund, you'll have friends and families, you'll have high net worth individuals, and that really does not scale. You need to have institutional investors on your LP board so that it scales pretty well. You have to start building those relationships early so that the LPs who like to invest in those sectors are tracking you from way early. So when they get the allocation, oh, it's time for me to deploy in this emerging manager or this new sector, or these are the managers I've been tracking. Let's have a chat with them. So that
Yeah.
conversation will have a very high yield, very high output, because they've been tracking you. You've been giving them information for a while, and they've been tracking you for a while. So it's easy to get the work done in that perspective.
Sure. What are some ways that managers could, what are some patterns that you've seen of managers that have raised the most money? What are they doing just as a common thread?
I think having the vision of what your funds look like long term is very important. I met a manager who mentioned that they have a manifesto of X AUM they want to manage. Like that's what their fund looks like long term. Like they're saying
Yeah.
5-10 funds ahead. And it was really
Sure.
refreshing to see the clarity and the vision they have while they're trying to build that, right? They have a
Sure.
clear mission, they have a clear succession plan. A lot of these venture firms, where the original GP is still there, but they're being very intentional, and okay, we're gonna be the benchmark model where we're gonna get new partners every few years and they're gonna own the whole firm, or we're gonna help bring the talent and like from within the firm. We're going to hire junior, and then we're going to make sure that become the GPs. So I think the
Sure.
most important way to know that you're going to succeed if you've got a long-term vision and if you're playing a long game. These are
Yeah.
also managers who are very, I, for the lack of a better word, nerds. So like a sector they are excited about, they go deep. Like they're very passionate. A lot of the wins I see, and that really helps me. Like if I'm talking to a manager who's an expert who spent a lot of time in a specific sector, has a lot of strong opinions, it makes me feel more confident about them. That okay, they know what they're doing. They're not flying with the wind, and they're the ones who are gonna find these next big big companies. They
Sure.
also have a very high respect and brand within entrepreneurs. So the best way to win with good deals is if the entrepreneur is talking to other entrepreneur. I think if you pass in an entrepreneur and then they send you another deal, that's a very high signal. So if you build a strong brand within a specific sector, within a specific niche, that really is a base for longevity.
Yeah. I've
So,
also seen funds that have invested in founders,
yeah,
and then those founders also become LPs. So it's like
yeah,
full cycle, So it's like
100,
you're actually
exactly.
asking for capital from someone that that you gave capital to. And they're like, yeah, I'm an LP. You can, talk to me as a reference, but I'm also a founder that they invested in,
Yeah.
7 years ago or something,
Yeah. And
So
that's the best thing, right? I mean, that's where I think the brand value of the venture capital firm really resonates, because you know that this venture capital firm is good. You really vibe with them, and then when you have money, you know that the best way to make money is these guys are really good. So that's a really amazing endorsement of the venture firm itself. If the entrepreneur comes back, becomes an LP in that specific fund, and they know that capital is going to increase exponentially.
Yeah. Is there any other model? So we got the benchmark model. We've got, these firms that have a partner track, right? People are kind of developing within. Is there like a third model? I know a lot of family offices or celebrities, they'll just hire like a seasoned partner to run their venture practice, and then the celebrity is probably still involved in the investment committee and makes the final call. But they're hiring talent to come in because they just don't have the bandwidth to do everything, and they're probably better serving their time with multiple ventures, right? More like a holding company model. But any other models that you've seen in terms of kind of succession planning outside of those three, or like capital deployment strategies?
I think it's very amazing the way venture capital as an asset class has matured. Like if you were starting a venture fund, let's say 20 or let's say even 15 years ago or 10 years ago, right? You'd have to build everything in-house, talent all the way from accounting, CFO, compliance. If you're ever planning to grow as a fund, it was very important. Now you can actually focus on investing and then actually do everything third party. You can have a separate controller, you can have a back office completely. So like you can be an amazing investor and do what you really enjoy, and then use everything else. Use the like back office support when it comes to accounting, when it comes to compliance, when it comes to finance. You can have fractional CFOs and have them manage all that in a very institutional way. I think one of the other things to a previous question on what makes a manager successful long term is that if they are building their firm in an institutional way, like not just deploying what capital they get, but actually building the bare bones, the skeleton to succeed, that really helps them succeed. Right? Usually these are amazing investors, but they want to become great fund managers.
And those are two different things, I would say.
Very different, very different. Like,
Yeah.
there's maybe some overlap, but very different. When I was at Plexo, we tried to start a YC for GPs where we help investors become great fund managers. So we had a lot of content for them. We had a lot of cohort-specific learning from within the program for them. But yeah, completely different skill set. But to get back to your original question on succession planning, I don't think the venture capital as an asset class has kept evolving. And I think more models will come into the space. What's really refreshing is I was speaking to a manager who mentioned that, okay, I'm it. Like this is it. It's a solo GP. Everything else is third party. I'm gonna deploy, and once I'm gone, I'm gone. like even having that clarity
Hmm.
is, I think it's very important. And a lot of successful
Yeah.
funds have come out that way, right?
Hmm.
Where they know that LPs are giving them capital because of that specific person. They know that it's very unique, and that is why they're like, it ends with me. And I think that's
Yeah.
also very, very acceptable.
Hmm. Sure. Yeah. I mean, there's obviously there's those key person risk clauses in some of those LPAs, but I mean, the nano funds and like the fund twos, many of them are still one manager. The only thing that I've seen that varies that is questionable that you can outsource is just the actual capital raising. So I've had over 500 fund managers or more or less, I think, on my YouTube show. And a good amount of them are emerging managers. And some of them that I've talked to, they said, look, you know what, you can only use a broker really at the end when you're trying to just top off your raise. Like maybe you've got you know another 10% or 15 or even 20 left. That's when you kind of help somebody get across the finish line. But a lot of that early raising was from the manager. But then I went to this like LATAM LPGP event, and there was a guy that was like, he's like, yeah, just call this broker and he just raises for me. And we've raised over like $1 billion or something. And if I need more capital, I just like contact this guy and he'll go out and raise more for me. So it's almost like he just made it sound so easy. Like you
It's
just
not.
it's
Fundraising is
almost like
not
a
easy.
faucet. It's like you just turned on a switch and it's like a faucet of capital where it's very, very difficult in the States. So it probably depends on who and those brokers. And obviously maybe he's well into his track record of multiple, decades or something, but it's still difficult. But I feel like just the LP side and the actual raising of assets is still something. I mean, obviously they have brokers, they have all these other partners, third parties that you can reach out to, but that's just been a comment there that I've heard from all the managers that have gone through our platform. Just kind of the difficulty to, number one, sift through the service providers and which conference should I pay for, or which platform should I join, or who should I bring in a fractional capacity. But everything else, you're right. I mean, all the fund admin, even just sourcing and screening deals, there's a lot of talent out there and there's services. I mean, Tiger for a long time used Bain, right? Bain Consulting Group to kind of do all the diligence and even source and screen. And a lot of those consulting firms, they have a huge Rolodex of private equity firms that they do diligence for. So they get deal flow that way. So I feel like deal flow, back office, admin, marketing, all that stuff is easily retainable, but I just feel like on the LP side, it's still quite nuanced, at least in the US. So
It is nuanced. And I think on fundraising, I would also add that fundraising is difficult for everyone, especially in this market.
yeah.
Um, to give you like archetype of who've been successful, you have to take a step back and think, okay, they're the established managers who have a track record and have a lot of LPs. So for them, it's just the LPs to re-up. Like that's if they want to maintain the fund size.
Yeah.
When it comes to emerging managers, the way we define it, the way I define it, the three boxes you can put them in, and they're not mutually exclusive. But one is institutional spin-out managers who were there at these big shops and they're starting their own new fund, Fund One.
Yeah.
They will raise comparatively easily because they have a track record at their big shop. And in a sense, they're trying to do the same thing. I mean, there are some new risk associated with them, but these are the ones who are raising Fund Ones, which are huge fund sizes. Right?
It's also important to get attribution as well. So I think
Yes.
they have these databases that show who the director was or who the principal was that sourced that deal. So I think there's some databases where you can just track your attribution so that they can
In
put
some
that on
cases,
there.
the original fund gives them that. Like they actually negotiate and they have usually, yes. So that's what I mean by institutional spin-out managers.
Yeah.
They usually have a track record and basically the attribution, their old firm gives them that. So that makes the work of an LP really easy. And I would say it is comparatively easier for them to raise funds. Like fundraising is easier for them. The other two buckets, I would say, one is operator turned investors. And I've been also seeing a lot of trend where there are still active operators, like they're still running big companies, or maybe a CXO role, maybe slightly less responsibilities, but they're also deploying capital. So like operator turned investors, that's the second category. And the third one I would say would be managers who've got strong network effects or like strong network in a specific geography, sector, theme. They have some angel investing experience, have some wins early on, and then they are doing a new institutional fund. Fundraising for the last two buckets, it's really dependent on who is in your network. If you've got big wins within your angel portfolio, it really is easy to raise if you get them to give you capital. Have a small first fund, have those big wins, or the network put capital in you, have more wins, and that's when institutional managers come in. Within the operating world, usually these are venture-backed company operators, and they have the venture capital firms invest some capital in them, either individuals or the fund themselves. They get some track record. They make sure that they have a strong, differentiated brand, and that really helps them fundraise. So yes, so like in a sense, you have to take a step back and define yourself where you stand, and then you have to figure out where the capital comes from you. Like if you're an institutional spin out, it's easy to get institutional capital in fund one, but majority, your fund one and fund two, it's gonna be family offices. It's gonna be folks like yourselves who back them in their early funds, and then they give a lot of capital to you, and then the institutional capital comes in. The risk reward cycle is slightly more different.
Sure. And then you talked about some of these celebrities kind of going into corporate America. Is that compensation, sufficient for them? Because they're used to, being probably, are they, basketball players, football players, they're making millions and millions of dollars, right? So are these corporate roles kind of a lateral move for them? Or do you think it's
I think it's only the very 1% folks within we try to serve all of them, but the 1% are the ones who are making that kind of money. But even then, I think an important aspect, the reason I said sales was a lot of the compensation is based on your performance. And I think that really resonates with them. Like if you work hard, if you perform hard, you're going to make a lot of money. So I think that is where it really links. And yes, if you are good at sales, or like what sector, and you're getting your compensation is based on the money you bring in, then it's easy to actually make a lot of money if you're doing hard work.
Sure. No, that's amazing. And then, like, are there any types of businesses that you've seen celebrities get into that have been interesting? Have they, like, are there certain kind of sectors that you've seen as patterns? Like, are they like, still tied to the sports industry, or have people just gone out and just done, I see a lot of people kind of, based on historical, information, some people have like started restaurants and, kind of things in the hospitality space. Or have you seen people kind of launch tech companies as well? And I'm sure a lot of your mentorship helps them probably on the, the software and tech kind of innovation opportunities. But are there any patterns, or I guess what I'm trying to say in a really long way is just, have you seen any kind of patterns of type of businesses that people build? Maybe in their
I think
next
it's
play?
easy to, if someone mentions athletes, it's easy to put them in the sports bucket, like any sports tech companies. That's where they excel. But I want to mention specifically that a lot of their skills are transferable. A lot of skills are transferable.
Sure.
So actually, they're going to succeed in a lot of multiple sectors. Even like health tech, even biotech, even like normal enterprise sales. I think I don't have the exact data to figure out if there's a trend, but anecdotally, I've seen a lot of them go into different sectors and actually be successful based on the skill sets they've had, only because those skill sets are transferable.
Sure. And I think it's also curiosity, right? I mean, people probably want to do something different. We have a fellowship program that helps people break into private equity and VC. And I've had medical doctors that are like, look, I don't want to do anything in healthcare. I want to get into deep tech. I think it's really cool to like look at rockets and quantum computing, and it's completely different than what I've been doing for the last 10 years. So sometimes kind of shaking things up and using your superpowers and your gifts, but just kind of doing something that's that makes you curious. That curiosity is something that you can't really replace with AI yet. So
curiosity and 0 to 1 journey. Like if you become an expert in one field, you actually you actually enjoy doing the 0 to 1, learning new things and expanding there. Those are the kinds of people, when they get into new sectors, they really shine because they're going to outwork everyone there. And that's really their superpower.
Yeah. Well, hey, Vishal, this was amazing. I'll have you leave us with maybe one piece of advice to take away for maybe fund managers. If you're raising a fund, what's kind of the, out of all the funds that you've talked to and all the LPs that you talk to, maybe what's maybe a piece of advice that you'd share with us?
I would say, I'm going to repeat myself here again, but I would say that having a differentiated pitch for LPs is very important. Do your homework, do your work before speaking to someone, start building relationships early. This is a relationship-driven business. I would
Yeah.
say always have relationships over transactions. If a LP invests in you, it's a more than 10 years of relationship, right? I mean,
Yeah.
there's a common saying that marriages last less than these LP-GP relationships. So start
Sure.
building the relationship early, do your homework, know where you fit, and then just be passionate about what you're trying to do.
Yeah.
Yeah, I think that's the one advice. Do your homework, have a specific pitch for different LPs. That really sets you apart.
Sure. Well, hey, Vishal, thank you so much. Really appreciate it. And thanks for all that you do in the community.
Absolutely, that's my pleasure. As I said, I'm so proud of the community we've been able to build, and in any way I can give back, please reach out to me. I'm more than happy to give back to the amazing community we've been able to build.
Thank you so much, Vishal. And we got some catch ups. I'm excited for all of those too. So
Thank you, Joe.
yeah, take care. Bye.
Okay, bye bye.